This is where poor people, and Democrats, not all Democrats are poor, there's a lot of rich Democrats, but this is where Democrats and I disagree. The deal of a lifetime comes across my desk every single day, but it doesn't mean that you should take it up. You should know where you're at in the cycle of growing your wealth and saving money on taxes. Today, we are in Louisville, Kentucky. And we're going to be hanging out with a couple of SubTo members looking at their deals, so stay tuned for that. Plus, we'll be at a meetup helping people get their first deal, so stay tuned for that. But right now, I've got 39 minutes to break down my tax plan of how do I avoid taxes. Why? Well, because by the time you watch this video, it will be the week of Thanksgiving. And everybody that's making money is stressed out about paying taxes. My friends, I'm sorry to tell you, but my friends are all in masterminds that are $50,000, $100,000, even $250,000 a year. And the number one conversation that's happening behind closed doors, not with poor people, but with rich people, is how do we legally avoid paying taxes legally? And so I'm going to break down some of the ways to stop paying taxes, because you can stop paying taxes. The problem is, even I had a Zoom this morning with somebody who's a wealth manager that blew my mother freaking mind, and I feel like I'm pretty savvy on taxes. So let's break down how to save money on taxes. Step number one, put your seatbelt on, okay? All right, so let's say that I'm talking about somebody that's making $1 million a year. I totally get that not everybody watching the channel is making $1 million a year, but let's just say you're making $1 million a year. Doesn't matter where it's coming from, let's just say you're making $1 million a year. Okay, if I'm making $1 million a year in Arizona, what is my tax rate in Arizona? My tax rate is going to be 37 point something percent on Fed and 2.5% something on state. Okay, I'm going to be combined about 40 to 45% in Arizona on taxes. So think about this. This is where poor people, and Democrats, not all Democrats are poor, there's a lot of rich Democrats, but this is where Democrats and I disagree. I should go and work 50, 60 hours a week on top of working 50 or 60 hours a week in a side business to make an extra $500,000 a year just so I can give 40% of it away? That's my fair share? The problem with the belief system of the poor is that they believe that everybody that works hard and figures out how to make more money should be penalized by paying for all the bullshit of everybody else. That's not how it should work. I should be rewarded for my efforts. If you disagree with me, go watch somebody else's channel. I'm not your person. You and I will always disagree on this. I didn't start with a silver spoon in my mouth. I grew up with 12 kids. My dad worked 3 jobs. We had no money. I bagged groceries while my friends, gallivanted around high school and college. I didn't go to college entirely because I didn't have the money. And I went on and figured out a way. I shouldn't be penalized by your politics. And so what I'm going to do is I'm going to use the IRS's code to legally avoid paying taxes. Here we go. So I have a taxable income of $1 million. How do I wipe out $1 million? Well, step number one is like pretty basic elementary stuff, right? It's corporate structure, right? So the right corporate structure can help you avoid paying taxes legally. And what do I mean by that? Well, you have an LLC, you have an S Corp, you have some of these things. I'm not the channel for that. I'll tell you, Matt Sorensen and Mark Kohler are some of my favorite people that do that on their channel. They're incredible. And they also advise me. But proper corporate structure is incredible. I use a company called Prime. If you guys go to startwithprime.com, you can get your LLC set up, your S Corps. They'll do all of it for you. And they'll even show you my corporate structure, and they'll get you on like a 1-hour booked call, okay? Corporate structure. Stop owning things in your personal name. Employees, everything's in their personal name. Like Andre, your cell phone contract is in whose name?
My name.
Your name?
Yeah.
What about your car payment?
My name.
What about your lease at your house?
My name.
So everything's in your personal name.
Yeah.
As an individual, you don't get the same tax write-offs as an LLC. So for example, if I go and I want to start a YouTube channel, this is a business, I go start a YouTube channel as an LLC, and I do 1 video a week, right? And I make $10 a year. That's it. I make $10 a year on my YouTube channel. The thing can lose money, it doesn't matter. Now, because I'm on YouTube, guess what I get a write-off, Andre? I get a write-off my travel, my food, I get to write off my camera equipment, my audio equipment, my clothing. Think about that. Every single thing you see me wear was a tax write-off because it's on camera. It's my uniform for my brand. Interesting, right?
Yeah.
So literally corporate structure is like probably 40, 50% of what everybody does. That's basics. And when you run into like really high level rooms where people are making 5, 10, 20, 30 million dollars, this is like child's play. Nobody's even talking about corporate structure because they got their corporate structure built in kindergarten. This is basic. Everybody should know this. Everybody should know this. Everybody should know this. Stop asking questions about it. You should just go to Prime Corporate Services. Start with prime.com. They'll help you out with that, okay? So I can deduct a lot of expenses. So I'll give you a couple of wild ones that people will also disagree with me. There's always a CPA. By the way, most CPAs don't know their butt from a hole in the ground. They don't. You know how many times I've upgraded my CPAs, and every time I've upgraded my CPA, my current CPA is Brandon, has been with me for 4 years. Brandon is like, dude, literally all these CPAs do is they go to college for 4 years. They're not investors themselves. They don't actually understand the tax code. They don't wealth manage for people that actually make any money. They're basically glorified bookkeepers. Where would they have gotten the experience of high-level tax planning? They don't. You think they learn tax planning in college? No, you absolutely don't. So people that go to college and get a CPA and they go do all this stuff, they are basically like H&R Block, okay? Basic. You know what they disagree with? They disagree with number 2 on this strategy, and a lot of them don't even know it exists, except it's right in plain sight, okay? So corporate structure, writing off on your LLC, some wild write-offs that you can get. My vehicles are write-offs. Why? Because I drive them for my business. My insurance is a write-off. My gas, my food for my family is a write-off. Andre, how is that possible? My wife and I are partners in our LLCs, and when we're sitting down at the dinner table, we're having conversations about meals or over a meal. Everything's a business meeting. When I take my kids to Disneyland, it's education expense for my future trust beneficiaries, right? Because these kids will be the future beneficiaries of my trust. I'm educating these kids. I'm taking them out, showing them other cultures. I'm teaching them other languages. I'm giving them experiences, and I'm building them into the future board members of my trust. Okay? So that's corporate structure, right? Basic corporate structure. If you guys want my corporate structure, start with prime.com, but Prime is who I go to for all that stuff. It's prime time, baby. Let's go. Okay, number 2, you ready for some next level stuff that actually still is kind of basic, and most people in real estate really screw up, okay? It is owning real estate. Okay, and the way you do this is you do this through bonus depreciation or what we call cost segregation. Okay, cost segregation is a very fancy word for an engineer reporting on what your property is worth. Okay, so let's say that I have $1 million that I made. I use my corporate structure and it wipes out $300,000 of my taxable income. I still now have a $700,000 taxable income. So like I had $300,000 of expenses like gas, fuel, insurance, cell phone costs, all the meals, groceries, clothing, all of my travel expenses, everything adds up to $300,000. The cool thing is I got to enjoy the benefits of that $300,000. It was an expense I was going to spend anyway. If I'm an employee, you're going to spend this shit anyway, for the most part. I just get to write it off. Now that $300,000 cannot be taxed. Make sense? Cool. So now I'm only going to be taxed on $700,000. So as a real estate investor, I go, okay, I need to wipe out that $700,000. How do I do that? How do I avoid being taxed on that? Well, I need to go buy real estate. Now, the way the real estate rules work is you either A, have to be a real estate professional to get this, or B, you have to do the short-term rental loophole. Okay, and this is why you see a lot of people, I bash short-term rental all the time. Yeah. The reason why I bash short-term rental all the time is because most people that are getting into short-term rental don't actually want to be in short-term rental. Why are they doing it then, Scott?
Just the tax write-off.
They just want the tax write-off. So when you talk to really high-level wealth managers, they all say, dude, our clients are so stupid. They watch somebody's stupid YouTube video about get an Airbnb, get your tax write-off. Meanwhile, most Airbnbs don't cash flow. And when you actually talk to people that own short-term rentals, they will agree with me. They'll say, well, pace is kind of right, but like one of my 7 does cash. Bro, shut the hell up. They don't cash flow. 1 out of 7 ain't cash flowing. Bigger Pockets had their newsletter came out this morning. It's so amazing how much propaganda that newsletter sends out. I love you, Bigger Pockets, but that is straight up propaganda. It was, the title of their newsletter today was, "Is short-term rental ready for a boom?" Are you kidding me?
Especially the market is going.
The market is crashing. Everything, the economy is getting softer everywhere around you. People are losing their jobs. Travel is down. What are you talking about? And then you dig a little bit deeper and they go, it's because everybody's chasing tax benefits, and so they're buying short-term rentals for the tax benefits. This is stupid. Why? It's stupid because they go put money into an asset that doesn't make money. So it's sunken cost. Now they have to manage it. Do you know that they have to manage it 100 plus hours a year more than anybody else on that team in order to get that deduction?
Yeah,
So you want to buy an asset, put money into it, and you have to manage this thing 100 hours more than anybody else. That means if you have an Airbnb manager, that Airbnb manager, you have to manage the property 100 hours more than they do per year to get this write-off. It means don't do it. It's dumb. Do you know what else is a short-term rental, my friends? If you really want to chase the short-term rental loophole, RV parks. Okay, what is designated as a short-term rental is anything that's 7 days or less as a rental. Well, guess what else is short-term rental? RV parks. Guess what doesn't have to be managed? RV parks. Guess what actually makes money? RV parks. So intelligent people in our SubTo community are chasing RV parks because they get the short-term loophole. Now, I don't really need to go after the short-term loophole. Why?
You're a professional.
I'm a real estate professional. Now, I'm not licensed. There's multiple ways you can figure out how to be a real estate professional. Ask ChatGPT. One of the ways is have your wife go get a license, costs $2,000 a year, and have her do meaningful amount of work in that profession, and you guys can get this. Now you can buy any type of asset and you can do tax depreciation. So now if I want to wipe out $700,000 in my income, that means I need to buy a significant amount of real estate. So check this out. I'm going to take a wild number and I'm going to multiply this by 3. So I've got to buy about $2.1 million in an RV park to wipe out that $700,000 in income. Here's how that works. I go buy an RV park for $2.1 million. Let's say it's one of my many RV parks I bought with no money down, so I have no money in the deal. This is the infinite hack. I go buy an RV park with no money out of my pocket. Either I'm buying it SubTo, seller finance, or even a combination of PML, or even using the Morby method. I'm doing, by the way, SubTo, seller finance, and Morby method are actually all 3 different strategies. Go into the YouTube channel, type in Pace Morby method, something I created 12 years ago. It's not me rebranding SubTo to Morby method. I love SubTo. I did not invent SubTo. I perfected it. You know it. Okay, so I could do all of those things, but let's just assume I'm no money out of pocket to buy this RV park, okay? Ooh, actually, I'll give you a good example, one I'm doing right now. You ready for this? I've got one right now in Hungry Horse, Montana, $3.5 million purchase.
Oh.
Here's how you get the deduction, okay? I will go hire an engineer, okay? The name of the company that I use, we'll put it down in the description. I do get paid for this. The name of the company is Madison Specs. I go hire Madison Specs. I pay them like $4,000. They go to the park and they do an engineering report. And they look at this park and they go, hey, IRS, we're gonna write Pace a letter that says that he can deduct 40% of that park right now against his taxes because there's all these repairs that will need to be done. Emphasis on will need to be done. It doesn't mean I actually have to repair them or they need to be repaired right now. They might need to be redone at some point in the future. So I can take a 40% against this 3.5 million. That means I will get a $1.4 million tax write-off. Will that wipe out my $700,000? It sure will. So now I'm not being taxed on my $700,000, which is awesome. What do I do with the extra $700,000 that I have remaining? Because I got a $1.4 million write-off. What do I do with that extra $700,000 write-off? I can carry it forward to the next year, bro. Are you kidding me? Why aren't they teaching this in high school or college? Like this, and by the way, this is basic. Like when you get into real estate, this is like everybody should know this. I'm so excited about this. I'm excited to tell you this for about the 100th time on my YouTube channel. So losses can be carried forward. So next year I can make $700,000. How much will I be taxed on that $700,000? You see how rich people don't pay taxes. This thing will make $12,000 a month net in my pocket. So I got an asset for no money out of my pocket because I use creative finance. I now no longer have to pay taxes on my remaining $700,000, and I have a $700,000 carry forward for the next year. Okay, now why doesn't everybody do this? Well, A, they don't know, and your CPA is an idiot. Do you know how many low-level CPAs are like, no, that's not how it works? No, that's exactly how it works. Oh, cost segregation is not a thing. Dude, it is literally in the tax code. In the link in the description, I will give you the link to the IRS's website and the tax code that says that you can do this. It's in SubTo A to Z. If you guys want a SubTo A to Z ebook, go down below. We'll hook you up. Okay, so they don't know, that's number one. Two, they ask the question of where do the deals come from? The next question is, how do I structure those deals? How do I manage those deals? Do you see how this becomes problematic to own real estate for most human beings? Most human beings are like, that sounds a lot of work. It is a lot of work. You want to make a lot of money, you got to do a lot of work. You want to make a little bit of money, you do a little bit of work. What do you want to do? You want to complain about it? Sounds like work. Oh my God. Work, 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 work. Okay? So these are kind of basic things. The reason why a lot of people don't jump into this is I don't know where to find a deal. Jump into a deal with me. Here's what's even cool. You, Scott, could jump into a deal with me and I could give you the tax benefits. I could give them to you. Okay? You guys want to hear some light gangster things real fast before I move on to some other high level things?
Yeah, we got 20 minutes.
So I had a girl named Angela Wayne. I don't know if you guys remember her, cute Asian lady.
Yep.
She loaned $800,000 to me on a big 256 unit multifamily deal. She didn't want any equity in the deal. She just wanted the tax write-offs. So she loaned me the money and she says, can you allocate some of your tax write-offs from that asset to me even though I'm not a part owner? I said, yes, I can. CPA in the comments are gonna be like, no, you can't do that. That's why you don't get paid by me. Somebody smarter than you works on my team. They're hiring, by the way. So if any of you low-level CPAs that don't know any of this stuff, you can go and work for my CPA. He's hiring. Starting at $12.50 an hour, which is basically the cost of AI that will do your basic H&R Block job, okay? So there's a lot of cool things you can do with depreciation. I can allocate and I can gift it away essentially to other people in the deal. So for example, if I'm raising a lot of money and I've got a deal, this $3.5 million deal I'm raising money for, I could entice these investors by saying, I don't need my full $1.4 million write-off because I've got a $700,000 carry. Not only will I give you interest on this money, but I'll give you this other $700,000 in write-off allocation. Pretty cool, huh? We just over here playing games, bro. These are adult games. Y'all over there playing hide and seek. Now, what's bonus depreciation? Bonus depreciation is if I go buy a vehicle, right? So this vehicle, for example, we bought this vehicle for the media team. This vehicle costs like 80,000 bucks. Guess what? That went against our income. So even though we bought this vehicle is making our company money, we're out making YouTube content and whatnot, this vehicle gave us a 100%, so it's a dollar for dollar. So I put 80 grand into it, okay? It gives me $80,000 off on my taxes. So let's say that after the step number one, corporate structure, the $300,000, I still have a $700,000 taxable income. I go allocate $80,000 in cash to this car. I get an $80,000 deduction off the taxes, which means now I only have $620 that's taxable. Does that make sense? Mm-hmm. So what is actually way more intelligent is you never pay things off with cash. This is why Dave Ramsey is wrong. He is right for absolute idiots that don't know how to manage their money, that they shouldn't have car payments and they should live small. Some people are different than others. Can we agree? We can agree that like Tiger Woods in his prime was better than Phil Mickelson in his prime, right?
Absolutely.
Okay, so every golfer is a little bit different. We got to coach them differently. So every investor, everybody's a little bit different. Dave Ramsey's not for my people. My people are like, I want more, I can handle more, I'm capable of more. Dave Ramsey is for the people that are afraid of their own shadow. Those people are called shadow puppets. So when you guys want to go work with him, shadowpuppets.com. You guys can go work with him, okay? So what you should be doing is, instead of just paying this car off cash, is you put $10,000 down and you still get the $80,000 off your taxes. I don't have to buy the thing with cash to get the write-off. You have to have the right corporate structure to be able to do this.
Otherwise, you're going to screw them.
Okay? In fact, let's see, what was the last vehicle I bought zero down? So the airplane.
Yeah.
That airplane I just bought, $100,000 airplane, I put no money down, no payments for 2 years, 0% interest. I got a full $100,000 deduction off my income with no money out of my pocket. We over here playing different games. We're playing chess. And there's all sorts of things. This is all basic stuff. Again, Mark Kohler, Matt Sorensen, Prime Corporate Services, way better at this than I am. I pay people to teach me this stuff, but I live it, right? Me and my team are constantly in it all the time. Okay, so bonus depreciation. Now think about this. The tiny home thing, which I've been talking about for a little bit. If I go buy tiny homes, and let's say I go to a manufacturer, this is where things get crazy. Let's say I still have a $700,000 taxable income. I could go put $70,000 down and buy $700,000 worth of tiny homes. Okay? So my finance company is going to give me 90% financing. I put 10% down. Guess what I just got? I got $700,000 worth of tiny homes for a $70,000 purchase. I'm now out. I have no more taxes. Cool. Now here's what's great about the tiny home allocation is that you take those tiny homes and you place them on parks that I own, and I do a profit share with you so that it pays off the other 90% of the balance with the profit share. So you never actually have to pay off that other remaining balance. That other remaining balance is paid off by a park. So you literally got $70,000. It reduced your taxable income by $700,000. Then once that allocation is paid off, cash flow continues to keep coming in, and you own a park and didn't pay taxes. I get half the rev share, you get half the rev share, okay? Now, if you guys want to get into stuff like this, just email jade@pacemorby.com. Okay, cool. So what's another thing I can do? Check this out. This is sick. I was on a Zoom this morning that literally go through like 7 more layers of things that I've never heard of before in my entire life. Today. I was today years old that's why I'm so pumped up right now. And I'm being feisty and funny because I'm pumped up and excited. I learned something new today, okay? So GPUs, okay? So graphic processors, right? There's all this massive demand for AI and these processing companies. And so there's a company that figured out, well, guess what? I can do bonus depreciation against these pieces of equipment, right? I'm buying equipment. So we go put 20% down on this equipment, and we get a loan for the other 80%. So again, let's say I need to write off $700,000 in taxable income, right? I would put $140,000 down, okay? Get my $140,000 down. It wipes out my $700,000. Now, why is that cool? I'd rather do the tiny home thing, Pace. Maybe. But here's what's cool about the GPUs. They go rent out the GPUs to AI companies and the data centers, and your $140,000 deposit will earn a 30% return yearly. So now I'm making $45,000 a year. I got a $700,000 deduction, but my 140 is now making me $40,000 a year. What about the other remaining balance of the $80,000? That gets paid for by the rental. So you also never have to pay off that balance. The AI rental pays off the balance of that loan. Guys, I'm telling you, I'm not even touching the surface of what's possible in avoiding taxes. It's crazy. I could go so deep. You'd be like, how is this even possible? And just to tell you, there's CPAs that don't think bonus depreciation is a real thing. There's people that will look at the GPU thing and go, oh, that sounds like a scam. Okay, cool. More for me, less for you. And I used to think, when somebody told me about bonus depreciation, I was like, that's not real. Why would they do that? Why isn't everybody doing that? Well, I'll tell you why. Because this video will probably get 7,000 YouTube watches. 7,000. And by the time it even gets to this point in the video, which is 20 minutes deep, people have already lost their attention span. 26 minutes in, they have not watched this far. So the question of why doesn't everybody know this? Their attention span is the attention span of a TikTok video. And not even that. If you look at the attention span studies over the last 10 years, people's attention span used to be about 7 to 10 minutes. People's attention span now is like 7 to 10 seconds. In fact, when you are laying in bed tonight scrolling, you'll go, wow, I just went through 15 videos real quick. I didn't even understand what they were all about. I never watched even one of the videos all the way through. It is crazy what is happening to people's attention span. So for the people that take the time and the energy to learn this stuff, the people that join, let's say the SubTo community, this is not even 1% of the stuff I teach. I bring my CPA in. I bring my team into the SubTo community. If you guys are ever thinking about like, I need to know this stuff, join the SubTo community. Click the link down below. Get on a call with the team and be like, I need to know this stuff. I thought Pace only taught creative finance. No, dude. I teach everything that I do. I don't only do creative finance. I do creative tax structuring. I do corporate structuring. I do raising capital. I do multifamily. Dude, get into SubTo. Stop being a knucklehead. Okay? Now, if I was Dre, bare minimum, this is what I would do. I'd go home and I'd book a call with Prime. And I'd go spend a couple $100 getting an LLC. Okay?
What if I already have it?
You did it wrong. Period. Why did you do it wrong? Because your name's on it, isn't it? And you did it yourself, didn't you? How'd I know?
Because I didn't do it with Prime.
You didn't do it with Prime. You didn't do it the right way. Your name should never be on your LLC. So if you look at my LLC right now, you'll pull up, let's say, Moving Forward Ventures in Arizona. Go look it up right now on the Arizona Corporation Commission. Who owns it? Moving Forward Ventures is a holding company that's held by Saguaro Trust, which is held by Lone Cypress Trust. Good luck ever finding what I own. You'll never see. So if I have a lawsuit or I have any problem whatsoever, somebody's gonna go, we wanna know what you own. I go, I don't own anything. I don't own anything. Take everything I own. Take it all. Take everything I own.
Okay.
So you have an LLC. You need to go set up a new LLC.
Okay.
Why? Because if my LLC had my name on it at one point and then I remove my name and I put a different, it's called a registered agent on there.
Yeah.
I put a registered agent on there, it will always show that that was Andre's LLC at one point. You want to hear how stupid I was? I started an LLC on my own because I'm like, I'm going to save the $75. Also like one of those people that changes their own oil. Like, bro, what? Do you also remove your own cavities? Like you'll cut your own hair? Like what? Or you could just go 4 months without a haircut and look like this, you know? I set up an LLC. Not only did I put my name on the corporate structure, I actually named the LLC PJ Morby LLC. Hey everybody, look at all the shit I own. It's all in my name. So whether you name your LLC after yourself or you don't, it doesn't matter. Your name should not be on any corporate documents whatsoever. Nobody should be able to find out what you own because technically you should not own anything. You ever heard the phrase, you should own nothing and control everything? I don't own anything, nothing. What about your cell phone? It's in a company name. What about your car? Company name. House? Trust. Nothing. I own nothing in my personal name. Sue me. Sue me. I literally, my personal bank account maybe has $1,200 in it. Maybe. I wouldn't know. I don't have a debit card to it. Anyway, corporate structure is incredibly important. If you guys are in SubTo, I have a whole corporate structure series I did a couple years ago. It's 12 classes on how I do this. Also, you want to hear another hack? So smartest thing that you could ever do is your driver's license should never have your actual residence on it. What should it have on there? A UPS store. Find a UPS store because they're treated like an actual business, not like a PO box. A lot of places are like, you can't apply for this credit card with the PO box. You can only apply with like an actual physical address.
Yeah, you're right. Okay.
UPS store gives you a physical address. So my driver's license is a UPS store. Oh yeah, and what I do is I pay an extra $20 a month. Here's what's cool. They filter out all my junk mail. They filter everything out. I've had people show up to my UPS store and go, is Pace Morby here? Is this all, what's go? You know, because they watch me on YouTube or whatever. You think I want people to know where my kids live? You think I want people to know where my house is? No, nothing, guys, nothing comes to my house, period. So privacy is really important, right? So you want to make sure you have a trust that protects you and your family, that from lawsuits and whatnot, everything is inside your trust. You don't own anything, even life insurance policies, those are in a trust. If you guys want a life insurance video, make a comment down below. But Thank you to our sponsors, Prime Corporate Services. They're incredible. They wrote a big fat 6-figure check for us to be on the road helping all these people around the country. Their $100,000 plus investment into this trip has made millions of dollars for people at these meetups. So thank you to Prime Corporate Services. You want to work with them, go to startwithprime.com. You guys want to know another tricky one? This is a bonus one. Do you know how much I pay in property taxes on my Montana house per year?
12,000.
You ready for this? It's $35,000 a year. So I'm paying, because I'm an out-of-state resident, and Montana hates that. So Montana doubles down on your property taxes. How can I get rid of my $35,000 property tax? I can bury a loved one on my property and turn it into a cemetery, and no longer I will pay property taxes.
What?
Yep. Did you know that Trump buried his ex-wife on one of his properties? Yeah. Why did he do that? It's to avoid taxes.
Oh, God.
Guys, like, there's so many cool things that are like, I could go deep. I could go Chicago deep dish on you. Right now, I'm New York's thin slice. If you guys want the Chicago deep dish on things that you can do, make a comment down below. If we get 300 comments down below, I will make a part 2 of this series and I'll deep dive on my corporate structure. But right now we are at one of our SubTo members' properties and we are on Creative Nation Tour. So go to creativenationtour.com, see us on the road. This meetup was incredible. We just left, tons of deals are going on. Jamil's on calls, I'm on calls. In fact, that seller call that I made at the very beginning. Are you guys ready for me to make a seller call real quick? Okay. I had a lead that came in like 5 minutes ago. I was like, I might as well talk to this seller for the first time tonight. You guys cool with that? Yeah. All right. That's not what I was planning on doing tonight. We'll do something else after this call.
Hello, how are you?
I'm good. So you're picking your kids up from school?
Yes, I am.
Okay, so catch me up to speed. Where are you at on the house? What's going on?
So, I was getting ready to get it listed and was in the process of getting the carpets ripped out. But, so I opened one insurance claim because there's a part of the roof that is leaking in the kitchen area. And unfortunately, they declined it, so they're not going to cover that. So that would have to be out of pocket. And then also, in between everyone coming in and out, the toilet had broke and flooded upstairs. So there's quite a bit of mold and water damage that insurance also denied. So I don't know where to go from here. So it's not good.
Okay, so a couple questions. Are you trying to stay in the house? Is that the best thing for you and your family? Or
no, I want to sell it.
You want to sell it?
Yep.
Okay, and you know that if you go through a real estate investor, you're always going to get a lot less money than with a real estate agent, correct?
Mm-hmm.
So how much do you owe on the house?
$120.
And what do you think it's worth?
In the condition currently, if I don't do anything, less than that. But I'm not 100% sure.
Okay, you think it's worth less than what you currently owe?
Are you fine with that? 1 second, please.
No worries.
Okay?
I got kids.
Are you okay? Look at me. Are you okay? Okay. You're going home and you're going right to your room. Do you understand me? Thank you. Let's go. Enough. Separate and walk. Now. Walk. I'm sorry about that.
Don't
Okay.
be. You're fine. I got kids too. They all need a karate chop every once in a while.
Yes. They're beating each other up in the middle of the grocery store.
Okay, I'm with my buddy right now, Jamil.
Hello.
Say hi, Jamil.
Hello, how are you?
Really good, thanks. How are you?
Will you pull up this address, Jamil?
Happily, yeah. So 97 South Crown. Okay.
Yep,
Okay, and this is in Vail, Arizona?
correct.
Okay, and if you list with a real estate agent, you would obviously have to fix a lot of those things, correct?
Yes.
Is that where most of your stress currently is?
Yes.
Okay. And if you move out of the house, where are you going to go?
I'm currently already living with my boyfriend, so.
All right. Living with a boyfriend, the house is vacant, and you're currently making the payment on the house?
Yep.
Are you stressed out about that a little bit?
No, not currently.
Okay. And what is, in an ideal situation, do you want to just be done with the house and be done with the payments?
Yeah, I mean, I don't really see any other option at this point, given what's all gone on with the home. So.
Okay. If I could put some money in your pocket, would that be preferred, or are you okay just walking away from the house?
It would be preferred, but I'm not gonna bank on it at this rate.
Okay. Okay. And when would you want to close escrow?
Whenever it can be. I'm not sure.
Like, would you want to be done with the house in 10 days, 30 days, 3 months?
I don't have a set time that I need.
Can you
to
sell
run
that?
by.
At the right number.
So I'm kind of just open at this point.
I'd buy it at the right number.
Okay. So how much money are you hoping to get in your pocket? I know that's not what you were expecting, but a mom with kids, I'd hate to buy a house and not try and figure out how to put some money in your pocket.
Yeah, I don't have a set amount, honestly, just kind of was hoping not to be in over my head trying to fix it, so
Okay.
anything positive is better than
Nothing.
that.
Okay, so let's say hypothetically, I barely just pulled up the address, so I got to do a little bit of research. Could I send somebody to the house to take a look at all the work that needs to be done?
Yes,
How would I be able to get in? How would I get somebody inside the house?
so I have there's a code for the door or there is a key there also.
Okay, cool. And let's say I go in the house, there's a ton of work. I come to you and I say, hey, I can close escrow in 30 days. I can pay off your mortgage and I could put $5,000 in your pocket. Is that something that you'd want to move forward with?
I can take a look at it, yeah, that's fine.
Okay, cool. And are you trying to get in there, get out of it faster than 30 days?
No, I don't have a set time.
Okay, cool.
Person's got a payment on there, so we want to do it sooner than later.
Yeah, you have a payment on the house.
Yeah,
When's your payment come due?
on the first of every month.
Oh, so we need to do it before the end of December, or before the end of the month.
Yeah, that's what I'm thinking. So what's your interest rate and mortgage payment?
I believe 3.25.
Okay, 3.25. Here's my thought. If you let me take over the mortgage and the mortgage payments, I might be able to put a little bit more money in your pocket. If I have to come up with cash to pay off your mortgage, you're going to get less money in your pocket. Would you have one way or another that you would prefer?
Currently right now, I'm not exactly sure. I'll talk it over with my boyfriend and see if he has any preference in it by any means, but.
Do you want me to get on a 3-way call with him sometime, maybe tomorrow?
He has to work, so I would have to just talk with him because he works nights and sleeps in the day, so.
Okay.
I'll just have to talk with him and then get back with you about it.
All right, what's my first step? Is it just getting over to the property, taking a look?
Go tomorrow.
Okay, that's fine.
Okay, cool. Text me the code and I'll get my contract over there tomorrow.
Okay, thank you so much.
You're awesome. Thank you.
Have a good day.
Okay, bye.
She is ready to sign and move forward. She's been going back, sending me photos. She's like, I want to get this deal done. Literally have no idea what to do without you is what she's telling me. I think we got a deal where we could lock it up for 120. Jamil could go move it for what, you said buy price is 144?
Right, but here's the thing, right? She's got a little bit of water damage in there.
Yeah, it's little.
Yeah, a little bit of water damage. Honestly, I think that we could have a situation where everybody walked away with 10 grand.
You, me,
And her.
We'll get it contracted tomorrow. Maybe tomorrow's learning lesson is how to get the seller under contract.
Yep.
You guys can watch my wife or somebody else be the TC on the deal. So stay tuned for tomorrow's episode. That's what we'll be doing. If I was going to start all the way over in Kentucky, here's what I would do. I would go focus on rural areas. There's nobody calling, nobody doing anything. The market is slow in these rural areas. They're all doing creative finance. Creative finance is killing it here. And I would start doing co-living with what Jamil's doing. And I would focus on nonprofits like what Jamil's doing. Do you have like webinars or anything that people can show up to?
Yeah. I do a webinar every Monday and every Thursday.
How do they find that?
I don't typically have the links made up until the week, so send me a DM on Instagram at JDAMJI, at JDAMJ.
DM him the word living.
Yeah.
Look at your link. And tomorrow we'll see you in Indianapolis, and tomorrow's learning lesson is how to get something under contract. We'll see you guys in the next video.
Later.